Hello everybody and welcome from me, Philip Nothard and Curtis Hutchinson to this special midweek episode of Motor Trade Radio podcast. Today we're delighted to be joined by our monthly chat about used car value trends by Derren Martin, Head of Valuations at CAP HPI.
Now, to set the scene, at the end of August, when we last chatted to you, Derren, CAP HPI's average used values had risen by 3.7%, the sixth consecutive month-on-month rise since March, as the market experienced what you dubbed at the time the hashtag summer of strength. Now, when we asked what was in store next for September, you did actually predict an Indian summer of strength, but I suspect the rate of increase for September may have taken you by surprise.
Hi guys. Yeah, without a doubt, it took us by surprise, the value movements during September. We've ended up 5.9%, an increase of 5.9% during the month, which is obviously a high. It's the second highest monthly movement in percentage terms, but it's actually the highest movement we've ever had in pound note terms because values have gone up over the last few months. The previous month was £825, the previous highest, in May for June. But September for October is £860. So it's that's at 3 years 60. So that during a single month of increases, it's blown us away again really on just how strong it's been. It's really, really ramped up again this month.
I mean, we do use the word unprecedented quite a bit, during these monthly chats. But I mean, that's an incredible rise, as you point out, in pound note terms.
Yeah, and it's thousands of pounds over the last few months. It's we've never seen anything like this before, and I would be surprised if we ever see anything like it again. We've had the national press all over it as well. We've been in the Daily Telegraph, the Times. We're in the Mail on Sunday this weekend. It's getting out there. I mean, it's the story now of price rises across the board, isn't it? But used car values have certainly not been immune to that, and some ridiculous price rises, really, when you think about it.
Yeah, and just drilling down into September, when did those values start to go up as quickly as they did, and what was actually powering it?
It really started to increase from around the 9th of the month, really, which I think was a Thursday. So around that sort of back end of that week, we saw we saw the date in the data that the values were ramping up. They'd already been going up, but that was when they sort of it really accelerated. We're speaking to the auction houses and to dealers, and they were mentioning it as well. When you talk to the dealers, you either get ones that are paying ridiculously high prices in their eyes, using Cap Live, and they're plus some to make sure they buy them, so adding more on to the live figures to make sure they got them. Or you've got retailers that are sort of reporting, well, I went out to buy and came back empty-handed because I just couldn't bring myself to pay the prices, and I tried to get them but I was just outbid, and those sorts of things. So it's just been I think there's concern over what happens with stock in the future. The semiconductor issue seems to be getting worse. It's not just semiconductors either. There's sort of shortages across the board. There's obviously well documented issues with the number of drivers and things like that as well, HGV drivers, transporters, but also demand. Consumer demand is still really strong out there. That doesn't seem to have died down. There's still plenty of consumers looking to buy, and I think they may be going in to buy a new car and coming out with a used one because they're not prepared to wait. They don't want to wait for a year, or in some cases we're hearing even longer than that. And in some cases we're sort of hearing from mainstream manufacturers that they're not building any of particular models this side of Christmas. So there's real shortages in new car, which has led to shortages in used car and strong consumer demand, and it's all sort of coming together to form this sort of black swan event.
And I mean, just touching on what you said earlier, I mean, you're looking at figures. I think you've reported that it's the 7th month of increases, which equates to, I think, 26.3% for those sort of 7 months in sort of April through to now October. And I think you've commented that the average is about 3,500. That's an average, so there must be some significantly high increases in that 7-month period.
Oh, there's been some crazy increases. Over the course of the last 7 months, we've had Toyota Auris Hybrid has gone up nearly £6,000 or 60%. Obviously, that one came down last year along with a lot of other hybrids, but that's now ramped up. I think the one that has taken me by surprise is something like a Vauxhall Zafira, which has gone up nearly 60% or £5,000. So £5,000 extra on a Vauxhall Zafira, which really is just a commodity car. I mean, a good car, but a commodity car and just a volume vehicle. Mercedes-Benz V-Class. We were looking at this last month, and I think we reported it in the press. It had gone up by £11,000. That's now gone up by £14,000 in 7 months. It is really it's staggering that some of these price increases. And you think about the dealers going out to buy a car that was maybe they would buy for £6,000, £8,000, and they're now having to pay £12,000, £13,000, £14,000. That's what's happening.
And you mentioned sort of the reference to new and the new lead times, and I think the 1 year 10K has increased by 4.5%, which is equivalent to £1,250 on average, which again, significant increase above the sort of 860 on the 3 year 60,000 mile average. But how does that now sit with some of those new vehicle prices? Because that's a question that everybody's asking, isn't it? Is how many vehicles are now over list in the marketplace, and are there some that have stand out for you, or is it easier to say the ones that are not over list at that nearly point?
It's not across the board, but there are certainly cars that are above list. Dacia stands out. I guess they're a cheap new car anyway. So even as a used car above list, if you can't get the new one, the used car still sort of stands out as being good value around that sort of £12,000, something like that. Suzuki Jimny, I mean, they're going for crazy prices. You've only got to look on sort of Motors or Auto Trader or something like that, and you can see some of the crazy prices for Suzuki Jimnys, which its new car price when it was available was in the early 20s, and you can see them starting with a 3. So it's crazy. I mean, we've got others, the Model X, Toyota GT86, the Ford Mustang, which has been over list before but is now well above list. These are our retail prices above list, but you have got some where cap clean is above list. So what you're paying in the trade for it, the Jimny is one of those. And obviously you can't get a new one, so because they don't make it anymore in the sort of the passenger variant. We've always had Porsches that have been in and around that area, but yeah, it is more mainstream cars that are going above list at the 1 year old with 10,000 miles on the clock, which means you could have bought one a year ago. You could sell it now and make money on it even if you bought it new.
And I suppose just I mean, there's the one is that I think the latest, and I think Curtis and I spoke about it on Saturday's headline, where I think BMW and Daimler have talked about that new vehicle price and holding firm on new prices because of the strength of the used cars. Do you think we'll see a little bit more of that going forward?
I would expect, yeah. Well, there's not so much negotiation even on a new car. I think the dealers are in a strong position with that, and I would expect that manufacturers have got to be considering putting their new car list prices up and giving away less discount over the course of the next few months and maybe even years. I think we'll see some increases there because maybe partly because they need to, but also because they will want to do that to maintain some of those used car values, because generally it's not sustainable for used cars obviously to be above new car prices, but at the moment it's a rare phenomenon because you can't get the new cars, or you can't get them now, and so people are paying what they need to pay. Also, it's masked a little bit by the fact that there's monthly payments obviously involved, and also you may be just funding the difference between what you've got for your part exchange, which has obviously got up in value as well, and what you're paying for the new one. So it is masked a little bit by that. But if you want a car, you've got to be prepared to pay top dollar for it now.
And Derren, in terms of sectors that have done particularly well this month, you did touch on the commodity car, which is something you brought up last month. I'm just wondering if that interest in those sort of bog standard commodity cars has continued through September, and if so, what's actually driven it?
Yeah, it's very much so again. But I guess what's driven it is they look good value still though. So MPVs, they're still reasonable value compared to those cars that are going above list. MPVs aren't sort of up in that area, and I guess the super minis, the C sector and D sector cars, they're the same. There's still some relative bargains there. I use the term relative because they've obviously gone up in price a lot as well. But yeah, MPVs have gone up over 7% compared to that average of 5.9. Super minis have gone up 6.6. City cars up 6.6%. And yeah, upper medium up nearly 7%. And when I know we're talking percentage terms there, but if you look at that in pound note terms, that's MPVs going up nearly £1,000 on average. So £940, that is. Super minis gone up nearly £650. Upper medium cars, so D sector, up over £1,000. And so in a single month, those are the price rises that we've seen in our live values.
Yeah, and it's astonishing, especially when you're talking about MPVs, which was pretty much a sector that had gone out of vogue, up until quite recently. But you're seeing some decent prices being paid for them now.
Yeah, well, I think at the moment anything goes really. You want something on your forecourt. You can't sell an empty space. We've been saying that for months, and those types of cars with sort of, I guess they went out of fashion. They were going out of fashion pre-pandemic. They were hit harder by the pandemic with social distancing and people not necessarily travelling. But this year you've had the staycation, and people are now not sort of social distancing so much. So those cars are now popular, and as I say, they're reasonably good value as well. So and they're good cars. They've always been good cars in that sector. It's just they're not quite as popular as the SUVs.
And, we were talking earlier about that overall list, not just at retail price, but also wholesale. And we always talk about, obviously, that retail price tracking in relation to rising wholesale prices. I mean, do you believe dealers are now holding their nerve and, they're buying high because they have to recoup their stock, but are they holding their nerve now in the retail and transactional market?
Yeah, well, they're definitely in the transactional side. They're not reducing from advertised price. You can't get a deal so much when you start negotiating. Obviously, a lot of it's online anyway. So, but then when you go in, you're not getting as much off or anything off. We've tracked retail pricing as well, and that has definitely increased and increased quite dramatically over the last few months. But it's still on occasion lagging behind the trade. The trade has moved first all the way through this period. Trade prices went up. Retail prices were still being advertised to take into account what people had paid for the cars earlier, like a few weeks earlier. So they hadn't gone up by as much. They have gone up, but there are definitely still pockets of cheaper cars out there in retail. And we spoke about this earlier, Phil, where there are still people buying. The dealers going out and buying cars from other dealers when they see a bargain. But I would say that some of the big guys, sort of the Arnold Clarks of this world, they're sort of pushing their prices up because they have to really, and that will probably help the whole industry if they can push their retail advertised prices up. Then that will mean that there's a little bit of wriggle room for everybody there, because it's the smaller independents that are probably going to be struggling more to go out and buy stock and then advertise them when they look at what some other retailers are advertising for.
Yeah, and that was going to be a sort of a follow-up question. I think we spoke a few months back where it was quite the norm. There was a lot of activity with dealers buying from other online suppliers who may have had product that was over age or not, or they were realigned to a pricing policy, or whatever reason those vehicles were not representing the strength in wholesale. But do you think that's more of a minority now? That is, that there are still some cheap vehicles out there. And I say cheap, I don't think there's anything cheap, is there? I think you might reference them as reasonable value compared to the strength of the wholesale and retail market. But there's still probably pockets out there rather than some of that early activity that we saw in Q1.
Yeah, it's pockets of it. You've got to dig around to find them, and most dealers, I would say, are switched on now. Certainly, ones that we speak to, they realise that they've got to buy high, and then they've got to try and sell high. So It almost needs everybody to sort of be brave to do that, and I guess the consumer is the loser out of that, but they're getting more for their part exchange, so it's just a bit of a movement up across the board at the moment. So it's but yeah, I think it's just small pockets of that, and you have got to really hunt around for anything that looks reasonably priced at the moment.
And Derren, turning to used car supply in the wholesale sector, we know there's been a long and ongoing shortage of vehicles from leasing companies, rental companies, ex-fleet cars from the OEMs entering the wholesale market. So what's your take on September volumes, actual volumes going through auctions, and how is this all impacting conversion rates?
So volumes are, we track in the wholesale volumes of the data, the sold data that we receive. They're around 13% below a normal year. So we're tracking back to sort of 2019, which was obviously the last normal year. They're in excess of 20% below where they were last year when the used car market was so strong. But at this point in time, it was starting to decline after a sort of a really strong summer. Conversion rates have been crazy. They're through the roof. So there's less supply out there, but more of those cars are being sold. So but we are still seeing sold volumes down, but that's because of the lack of supply, not because of lack of demand. So the demand is pushing conversion rates very high, into the 90s on lots of occasions. We've heard reports of there was one auction that certainly from a manufacturer that sprung to mind when you're asking this, that I think they had about 50 cars to sell and they had 100 dealers buying. So that only leads to prices going up. It's crazy.
They had double the buyers.
There's an obvious outcome to that, isn't there? There's just
yeah. It doesn't take a rocket scientist to see what's going to happen there.
Wow.
Yeah, definitely. And I think probably the couple of big questions, Derren, and get that crystal ball out. But what's next? What can the listeners expect in terms of how values could trend? And I mean, if we'd asked you this months ago, who would have known? I mean, we were talking earlier that we were thinking it might, some increases around that 1-2%, and here we are talking about a 5.9% and a 22% year to date. But what can you expect now as we go into October and for the rest of Q4?
Yeah, well, I think if we'd predicted this to happen, I think people would have been leading us away and put us in a dark room somewhere, because it's just no one saw this coming.
Or retired.
Yeah, something like that. Yeah, I'm not that old. It's going to be really interesting, and it's really difficult to call. I can tell I'm sitting on the fence a little bit with this. Yeah. I think that, when we speak to the manufacturers, certainly volumes of new cars are going to be heavily affected for a long time, as I mentioned earlier, which is going to mean that the supply of used cars is not going to ramp up anytime soon. Obviously, we've lost over 1 million cars from the new car registrations over the last 18 months or so, longer than that now. So those cars are lost. Part exchanges are lost. The short cycle volumes from rental companies, manufacturers aren't churning their demos and company cars. So there's a lot less cars in the market, which, even if demand drops away, which it can tend to do as we head towards Christmas, I can't see that there's going to be the supply that will cause any sort of crash in the market. We just can't see it, and I can't see it for quite some time. Whether when new car supply comes back and people start defleeting cars all at the same time next year at some point, that is obviously a concern and something to be avoided across the board. But at the moment, I don't think values can keep going up like they are, but I have said that before. Yeah. But I think that they can stay strong, and they may go up again during October. Again, I'm going to say I don't think they'll go up by as much as they have been doing, but we think that the market will stay strong because demand still seems to be strong for consumers, and the supply levels just aren't there to mop that up. And I think, as a bit of reassurance, I think that when we see it turn, it will potentially turn quite slowly. We've seen that in the van world, where values did go up quite considerably, but they haven't crashed back down again. They've kind of stabilised, and they're going up slightly now. So hopefully that will be the situation that when it does turn, because it has to turn, it can't keep going up. But I don't think it's going to be anytime soon. And what we're expecting is a slowdown of the increases, and then maybe a stabilisation before they start to drop again.
You may not have an answer to this, but I have a view, I suppose. But do you think we're kind of at a new level in some cases? Not for everything, but do you think some vehicles will not necessarily stay where they are today for the future at that sort of 3-year 60 point, but some of that increase will remain, and when we do return to some kind of, and I say normal seasonality depreciation, if that ever does return. I mean, we've had years of external pressures in the sector that have altered that, but do you think when we do maybe turn to a 10, 12, 13% annual depreciation, that actually that's what it will be, and some of these increases will remain?
Yeah, I don't think that it's going to come crashing down. When you put $5,000 on a Severa, I don't think that's going to come off in a hurry. I think that it has. Maybe they were too cheap before. Maybe it's a lot of car for what the prices were. So, yeah, I think it will turn, but I agree it could have pushed prices up across the board. The concern about that is obviously at the top end, the newer used cars. If they're above list, that's generally not sustainable. Even if manufacturers put their new car prices up, I don't think that is sustainable. And obviously, you've then got to have a difference between a 1-year-old car and a 3-year-old car in price, which could cause a bit of pressure on there. But yeah, I do think that I don't think we're going to lose all of these increases over a longer period of time. I think that it has reset some values upwards personally. But history does also tell us that what goes up must come down.
That is the thing. Yeah, we've seen it before, haven't we? If you look through time, that particularly the financial crash of that 7-year period, we saw that it did realign itself, didn't it? We've seen it numerous times through the years. But yeah, it's a thought, like you say. Some maintain, but like you say, we could be in a new market that we get a more stable market. But that new to nearly new, that 0 to 6, 0 to 12, 3-year. There has to be a relationship between them, doesn't there?
Yeah, and we've never been in this situation before, obviously, so it's all very new, and we think that's what's going to happen. But as I say, we didn't expect this strength over this summer, so it's highly unusual times. But it is. I don't think there's anything untoward coming in the short term. I don't think there's anything to worry about.
And Derren, just following on from something you said there about pricing, and certainly on the new car side, do you think manufacturers are looking at what's happening in the used car market and setting their new car prices accordingly when they start to release them?
I think there's the potential to do that. I think we are starting to see it a little bit, and we've heard rumours that it's going to happen. And obviously, they're fully aware of what's happening in the used car market. They residual values have never been more important to manufacturers. Interestingly, we're not getting queried as much on when we're putting prices up as when we're putting prices down, because they obviously want those values to be as high as possible. Yeah. So yeah, it's they've certainly got a very close eye on it, and I would be very surprised if they're not considering price increases for their new cars. But maybe they don't want to be the one that goes first. But I think if one goes, then others will follow.
Yes, no, definitely. Oh, well, look, Derren, many thanks for joining us today and providing the podcast with some exclusive insight into September's values and trends. So the latest editorial is actually available on the CAP HPI website now. So listeners wishing to take a deeper dive into the month's trend can head over to cap-hpi.com and have a look. And the editorial, I must say, Derren, the editorial is always an entertaining read. So I do urge anyone listening to head over there to check it out. So look, many thanks for joining us, Derren. Do come back next month and tell us how October panned out. So until then, many thanks.
Yeah, well, I'll come back definitely. Yeah, we've also we've got a webinar, CAP HPI. We have a webinar every 6 weeks or so. So we've got one next Tuesday, the 5th of October, and anybody's welcome to subscribe to that and to listen where we give a bit more detail on what's happened. a few PowerPoint charts that make very, very interesting viewing, and we cover off LCVs as well. And also there'll be our forecast team giving a bit more info on where they see the short-term and long-term future.
Yeah. So they just need to head over to the CAP HBI website to register for that, do they?
Yeah, I think that the details are on there. Yeah, and if they can reach out to me on LinkedIn as well if they want to contact me, and I can send them the link.
Fantastic, Derren. Well, I mean, let's see what pans out next. What we can talk about next month. See how many times we can get unprecedented and new highs and new words for the sector. But no, thanks a lot, and it's really appreciated. Very insightful as always, and great work there from you and the team. Obviously, keeping everybody well informed in these interesting times, should we say? But thanks again for joining us today, Derren.
Yeah, thanks, guys.